So as you can see, we're having Michael Saylor today. Regardless of who the USA's president is, the next shoe to drop is the economic sector.
You decided to move your company in the direction of Bitcoin. It's obviously been an incredible decision thus far, and you've become really a celebrity in the crypto space. I mean, I had Max Kaiser on recently, and he came out with a Michael Saylor t-shirt. How have you been dealing with the newfound celebrity status here?
I'm happy to be a member of the team. Actually, there are a lot of people that were carrying this banner of Bitcoin for many, many years before me. It was a lot harder to be a Bitcoin advocate in 2017, 2019, 2013. You had to have a lot more vision. You had to have a lot more conviction. Max has been around since the very beginning. I felt like in 2020, after March, it became a fairly easy decision. The entire world had a problem of monetary expansion. If you're an engineer, you look for a technology solution to a problem. There are a lot of non-technology solutions to monetary expansion. I mean, gold is a 5,000-year-old non-technology solution. And now Bitcoin is the technology solution. I had 10 years of experience. I could look back on what all the Bitcoiners have done for a decade. And I just had to make a guess, which is the rest of the world going to be rational and look for a technology solution to their problem? And I don't think it's an irrational thing to bet on technology in the modern era. So that's what Bitcoin is.
What do you make of like the FCA, the ECB's Lagarde, and now recently Janet Yellen coming out warning people about potential dangers of Bitcoin, of how it's used to fund, for example, terrorist activities? What do you make of all this?
You know, I think what's driving the Bitcoin market is institutions. And institutions are bringing billions and billions of dollars to Bitcoin because they want to store a value against monetary inflation.
Let's remember, this man is giving you an opinion. I think. Remember, you got to listen to these words. I think. The only other question that you would look at when they say, I think, is that what they really think? But at the beginning of this interview, he's very closed off, very tight. He had his arms tight against his body. He didn't move quite a bit at all. And now we're getting to this question, and he's very loose in comparison. His arms are rested out. He's moving his body a little bit more. And we can kind of chalk up the earlier one to, he got a lot of attention that he's not used to from the world, and that can put stress on the mind.
Everybody's buying this Bitcoin on regulated exchanges. They're storing it with regulated custodians, and they're doing it subject to AML, KYC regulations that have been in place for a long, long time. There's not anybody that's buying.
So as he speaks, everybody's doing this, everybody's doing that. Then he switches over to putting his arms crossed. It looks like they've crossed themselves. So he's getting closed off and getting really stiff again as far as this KYC mess.
Bitcoin right now that isn't expecting to do it on a regulated exchange subject to normal regulations. And the fact that AML, KYC regulations apply to bonds, Apple stock, Tesla stock, and other types of assets hasn't kept them from having value. So I think the summary here is we're going to find conventional AML, KYC regulations applied in Europe and the United States. And everyone that's buying Bitcoin and holding Bitcoin as a monetary inflation hedge is going to find that to be acceptable. And this is much ado about nothing.
Okay, interesting.
And we're very stiff through that. Much ado about nothing. Actually backs his neck up as he swings it in the negative. The body says there's an underlying sense of deception in speaking in this realm. My guess is that he is not a fan of KYC. But that's just a guess.
And in regards to the returns, absolutely, Bitcoin's returns, no comparison to gold's. But we also don't see, a 30% correction in a day on the gold front. So again, as a store of wealth for someone who wants to sleep well at night, how do you get over that? Those massive corrections that we just don't see in the gold market.
First of all, I think that the massive corrections are becoming less massive year by year, quarter by quarter, month by month. The market in Bitcoin is stabilizing as more institutions come into it. And I think we can see it over the past 12 months. Second, I think that everything that's living on this earth is volatile, and things that are dead are not volatile. And so I would much rather have a volatile 300% return than a non-volatile 15% return, or a lesser return. And there's least volatility in cash with a 0% return. So stability is stagnation, volatility is vitality. Living things are volatile. I like living things. I want to live. Life force implies volatility. It's like a Jedi mind trick to convince you should be afraid of volatility. If volatility is going to return 200% pre-tax every year for 12 years or for 10 years, and you're afraid of it, you lost 99.5% of your wealth because you're afraid of volatility. That's like, you can't raise your children in a bubble and tell them they should not. I mean, if they stay in their basement and they never leave the house and you surround them with the bubble, how are they going to grow and live and prosper?
No, I like that. You're getting me there. I like that. I see what you're saying. I hear what you're saying. You brought up gold confiscation. The last time it happened was 1933. Yes, is it something that the US government can still do? Yes, they can. What is the likelihood of that happening again?
Of gold confiscation?
Yes. Do you really see that as a reality, that's something that could happen again?
I don't think that there's going to be gold confiscation going forward. And I think that what we're going to see happen is that people saw in 2020 that gold wasn't working as a monetary inflation hedge, and Bitcoin is, and they didn't understand the technology. You're going to see people selling their gold and buying Bitcoin. You've got a arbitrage difference, 300% on Bitcoin, 15% on gold. How long are people going to allow the differential interest rate? One currency yields 15% interest. The other currency yields 300% interest. And the only thing anybody has negative to say about it is it's new and it's going up, 10 times faster in a volatile fashion. At some point, people are going to be shorting gold, buying Bitcoin, and it's going to accelerate.
He opened up towards the end of that. Shorting gold, buying Bitcoin. Now, most of this interview, he's really tight. That's stress. And the only time I really see him open up like at that moment is when he is really sure on it. Which, for him to be so tight through most of it, and only a few times he opens up, that really sure part is because he's witnessing it.
Is there a place for both Ethereum and Bitcoin? If so, what is the material difference, real or potential, between them? I'd like to add, I also want to get your thoughts on the run-up we've seen in Ethereum here.
I mean, Bitcoin is the emerging dominant digital monetary network. If you're looking for a treasury reserve asset and you're looking for a generational store of value in lieu of gold or in lieu of any other scarce tangible property, then Bitcoin is compelling, and it's compelling because it's simple. Ethereum is a speculative asset, and it's a very ambitious technology project. It comes with a lot more complications, a lot more risk. If you have a technology portfolio and you wish to invest in a technology that has risk and complexity because you're interested in decentralized finance and all of the applications in the Ethereum blockchain, then that's an interesting thing to consider. But if you're looking for a treasury reserve asset or a long-term durable store of value, I think Bitcoin is obviously the right choice. In my opinion, the entire world has a multi-$100 trillion store of value problem, which will be solved by the dominant digital monetary network. Since Bitcoin is only 650 billion in market cap, and since there's a $200 trillion addressable market, the most obvious thing in the world is buy into the dominant digital monetary network and wait for the rest of the world to start to realize this is the solution to their problem. There's no better risk-adjusted investment idea I can see in this world right now than to buy something everybody needs that's got 95% network dominance that is engineered specifically for that purpose, that dozens of billion-dollar entities are embracing for that purpose right now.
This one comes to us from...
I thought that was kind of interesting. So he's talking about Ethereum and he's pushing Bitcoin. And if you see it at the very end, see that looking around and he's bouncing a little bit nervous. You see that? I'd make a bet that even though he said that, he is stacking Ethereum. Because remember, he's a businessman. And businessmen, especially smart ones, and he seems to be a very intelligent man, they like to walk the law. What do I mean by that? The words that they speak in these kind of forums are very well picked. So you see that brain search looking? Did I catch it all? Have I said too much? And when you see someone doing that after that kind of question, it should lead you to believe that they're purposely misleading you. Not to say because of his background and his legal speak. He's not saying anything that is wrong in all sense of that word. He's giving you a definition of how the world should work. What he failed to do is tell you anything about Ethereum itself. He spoke not on it at all. It's like an avoidance in his speak, and his body backs that up.
What percentage Bitcoin does Michael recommend for your average retail investor? Does gold still have any place in a retailer's portfolio?
I just can't see why anybody would buy gold. I think gold's going to be demonetized.
And here we go right into this. I don't see why anybody would buy gold. And he's much more relaxed on this question than he is on Ethereum. And he tackles it right up front, not the doublespeak.
Without naming names, has Michael convinced anyone with as much cash or more to move their treasury into Bitcoin? So we all saw that famous exchange between you and Elon Musk. Have you been able to convince any other CEOs or get them halfway there?
I've been told.
So she asked that question. I thought this was kind of funny. So are you able to convince any CEOs or halfway there? And right as she goes in, have you convinced? And then CEOs, you see him do this like arms come up like a shoulder shrug, like he's trying. If it's done anything, he doesn't know.
Talking to a lot of people for the past, 6 months or so. And I think that ever since we announced publicly that we were embracing Bitcoin back in August, and when we came out of our quiet period in September, I've had a lot of conversations with CEOs, a lot of conversations with institutional investors. As I've said before, Daniela, everybody has this problem. The more money you have, the bigger problem you have, and everybody needs a solution. The best solution is the big tech dominant digital network solution. That's how people solve their problems with Google, with Apple, with Facebook, with Amazon, with Microsoft. They're going to solve their monetary problem with the dominant monetary network. And I think in 2021, you're going to see a lot of corporations embrace Bitcoin. We're hosting a Bitcoin for Corporations Summit coming up February 3rd and 4th. Lots and lots of companies are coming. They're all trying to figure out, how do I plug in my P&L? How do I plug in my products? How do I plug in my balance sheet? Right? You're either going to do it because it's the solution to your problem, or you're going to do it because it's a big tech network growing north of 200% a year. Why wouldn't you do it?
Just to wrap here, Michael, the number one question I got for you, price forecast. They love hearing it. I think you have the biggest call out there still. But where is Bitcoin headed, Michael?
People ask me about that. And the point that I make is Bitcoin is not a stock, but it's not even an asset. I mean, if it was a stock and it went up by a factor of 10, then you're valuing it versus the underlying cash flows, and you're thinking that the P to E ratio is blowing out, is becoming very risky. But it's not a stock. A stock is a reflection of the outlook of the cash flows of another unrelated product in a fiat currency system. Bitcoin is pure monetary energy. As the price goes up, the monetary force related to Bitcoin goes up. The attraction.
So as he's speaking about this, she's just asked him about where he thinks the price is going to be. Now, the thing that should really catch you here, one, he's really open about it. So this is him telling you his truth. The other thing that should get you is this is a guy who's the CEO of MicroStrategy telling you that Bitcoin is money and he's not pricing it against dollars. His mindset says dollars don't matter.
I would like to thank the sponsor of this video, Fero. Fero is one of the few cryptocurrency projects that I respect. Unlike most other cryptocurrencies, Fero is focused on safeguarding your financial privacy without compromising on trustlessness, which means no third parties are required, and transactions are private by default. Fero also has an exciting roadmap to look forward to. Features such as Instant Send, where payments can both be sent and confirmed within seconds. There's also Elysium, which adds tokenization functionality similar to Ethereum, but it also enables these assets to enjoy Fero's privacy technology. There's many more things on the roadmap, and if you'd like to learn more, head over to fero.org.